Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba and share with you guys some option strategies if you are bearish or bullish on Alibaba. But before I get started, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Also, if you are holding onto Alibaba, please give me a thumbs up. I am trying to reach my goal of making at least $1 on YouTube. It's been a tough 2021, and let's help each other out. So Alibaba was down 3.41% on Friday. We did see a huge rally on Thursday, which was December 30th, went from a low of 112 all the way to a high of 124. I expected this pullback because Alibaba hasn't had 2 consecutive green days. If we take a look at this chart on FinViz, we can see that Alibaba bounced off the support, which is the blue trend line, throughout last year, and the most recent bounce was back in February. So right now it is trying to push up the 20-day simple moving average. Right now it's still below the 50 and the 200-day simple moving average, but it has been trading in this range beginning of June. We can see that it couldn't break the purple trend line back in November, had it earnings report and sold off. In the past month, it's just been trading in this range from 110 and 122. It's been having a hard time trying to break that 122 resistance, but I do believe that once we break that 122, we will be able to see 140 again. We take a look at this article here. It says the stock is ridiculously undervalued with a forward price earnings ratio of 14.59 and a 3-year EBITDA compound annual growth rate of 16.8%. It is one of the largest and fastest growing stocks in the world, as is the GF value line, which indicates the stock is significantly undervalued currently based on historical ratios and adjustment for past returns and future earnings projections. Cannot be argued that Alibaba's trouble are not well known. While the Chinese Communist Party, Jack Ma, are potential roadblocks to the company's success, I don't believe for a second that Chinese leaders are stupid enough to destroy the greatest business the country has ever produced. Charlie Munger and Bill Miller appear to agree based on the significantly holdings they have in the stock. They know you have to buy fear and go against the crowd. Regardless, things are looking up. The Chinese government is normalizing its variable interest entity structure. The China Securities Regulatory Commission recently released proposed rules for domestic companies if they want to list overseas. This is the first time China has officially sanctioned the VIE corporate structure. As a result, fear of Alibaba delisting from U.S. exchanges has decreased. Additionally, the Biden administration is probably not too keen to escalate economic war with China given the rise of inflation. China is a massive deflationary force, and a sharp increase in the prices of imported manufactured goods will not be politically palatable. So I do want to show you this bullish flow. This is premium range over $500,000. We have a lot of calls, buying calls and selling puts. So those two are bullish trades. We can see from all of this bullish, only 4 are bearish. So the bearish ones, this one is a put, buy put that expires March 18th, but everything else are very bullish. We have buy 120 calls for March 18th. We also have sell 120 puts for March 18th, sell 200 puts for January 21. And then also we go down here, we can see another BABA flow. Buy 100, call to open. This is 10.95 million for 100 calls. These are in the money calls that expires March 18th. So what this person did was they bought BABA March 18, 120 calls for $9.55. So it is a little expensive if you don't have the funds to buy 120 calls. So what I'm going to show you now, what you can do, go to the options chain. Go to March 18th. So those were 120. You can see that the price actually went up because Alibaba was trading around 110. 112 when that trade was placed. So now what we can do is we can actually go and buy the 125 calls, and then we can sell the 130 calls. So instead of paying $700, $1,000 for a call option, we're only going to pay $188. But the problem with this is our profit is capped to only 312, which is still pretty decent if you're trying to grow a small portfolio and you don't have the funds to pay for a actual call option. This is a strategy that you can use. Another one you guys can place is called a put credit spread. So these two are bullish trades. So what I'm going to do is sell the 120 and we're going to buy the 115. So instead of paying a debit, you're going to receive a credit of 229. So we'll take a look. Max profit is 230, max loss is 270, which still isn't bad if you're going to follow the flow on Alibaba. We know that Alibaba is undervalued. If you think that it won't reach 120 or above by March, what you can do, you can go further out in expiration dates. You can actually go to April, do the same thing. We're going to buy the 125 and we're going to sell the 130. So it's going to cost a little bit more because you're giving yourself more time, but that also gives you a more probability of being right. So if you are bearish on the stock, I hope no one is bearish, but if you are, what you can do is you can sell a call credit spread. So this is a bearish move. If you think the stock is going to be below a certain price, let's say you believe that Alibaba is going to be below 140, what you can do now is you can sell the 135 and buy the 140. You're going to receive $132 and your max loss is 368. Another one, which is a bearish trade, is buying a put debit spread. So let's say you believe that Alibaba is going to go below a certain strike price, let's say below 100. What you can do now is you can buy the 100 puts and then you can sell the 95 puts. You're only going to pay $108 versus paying $400 to $500 for one put option. $108 and your max profit is $392 if the stock closes below 95, which is great if you're hedging your positions. So these are pretty good strategies that you guys can implement if you are bearish or bullish. And if you think it's going to be trading in this range, what you can do is combine the put credit spread and the call credit spread so you'll have an iron condor. So that's pretty much it, guys. Let me know your thoughts. And I am trying to build up my Discord server. So if you are interested in sharing ideas and getting some of my alerts, definitely come check it out.